Minute for everyone to settle in, and then we'll get underway. That might be maybe a good time to start, I guess. If anyone else can just make their way in when they get here. Good morning, everyone, and welcome. I'm Mark from the Newmarket Business Association, if we haven't been acquainted previously. And we thought, in light of what's happening to the world at the moment, after a pretty encouraging start to 2026, where we came into the new year full of optimism and hope for possibly a better innings than we'd had in the last couple of years. And things were looking pretty good. I know from a leasing perspective, things were going great guns right up until about the second or third week of March, and then things sort of took a bit of a crazy turn. And the conflict in the Middle East is having a major impact, obviously, on everything around the world, including for all of us in New Zealand and including all of us right here in Newmarket. So, as we know, over the past few months, the global economic landscape has been seismically changed by rising tensions in the Middle East, an area that still remains crucial to the world's energy supply. The ongoing conflict and uncertainty has rippled through fuel markets, as we know, with oil prices showing volatility as supply risks and geopolitical maneuvering intensify. And we all know that, the $100 at the pump isn't quite what it used to be a few months ago. Layered on top of this is the ever-present wild card of US leadership, where policy direction can sometimes shift as quickly as the headlines, and multiple postal tweets throughout the night from the president of the USA, and keeping allies and markets and analysts equally on their toes. I think all of us have been sort of now swept up into the world of Donald Trump, which probably we were a bit more removed from in the past, but now we are directly impacted on a regular basis. It does seem to many a bit of a spin the bottle strategy, to be honest. And for small businesses, for us, all of us here, far removed geographically, these developments matter. Higher fuel prices, transport costs, disrupted supply chains, and a dampened consumer spend all have downstream effects for us. While the specific or the exact trajectory remains a little bit uncertain of the situation unfolding, ranging from prolonged instability that we're sort of seeing to a potential de-escalation. It does seem to change on a fairly regular basis. But what is clear is that we're operating in a period right now where global events have quickly influenced our local business conditions. And as we know, cash flow is king. And this webinar is really a reminder of that, with some commentary and tips and tricks to help you along the way. It does feel a little bit COVID era, to be honest, having to do this and sort of bring out some of the dust off some of the things in the cupboard to bring them out to help people with some business ideas. But I think it's necessary, and it's never a bad thing to remind ourselves around some of the fundamentals around cash flow. So we are very lucky to have an expert panel with us, Dean, Winnie, and Vinay, who are all here with us to give us some expertise. I'll go through each of the gentlemen individually, first of all, to introduce them. So Dean Harris is trade specialist with the BNZ, based right here in Newmarket. He's been with the bank since January 2020 in frontline banking for the last 19 years. He specializes in customers with turnover between 2 to 100 million through a range of industries. And as a trade specialist, Dean helps customers mitigate product, payment, and performance risks which pop up when importing or exporting, and to understand the bridge cash conversion cycles. And Winnie, senior partner commercial with BNZ and also a Newmarket, and also on the Newmarket Business Association board for several years. Winnie's a commercial banker with 22 years industry experience working with privately owned commercial businesses across different geographies and industries, including import, export, food, beverage, retail, and professional services. And Vinay is the managing director and owner at BetterCo in Newmarket. BetterCo, an advisory and accounting firm who work for small and medium businesses across the country. They specialize in helping businesses and property owners understand their numbers and plan with clarity. I should also note BetterCo have won multiple awards at the Newmarket Business Awards, including Supreme Winner back in 2021. And on that note, Vinay is going to kick us off with his presentation. So, Vinay, I'll hand over to you, mate.
Thanks, Mark. Good morning, everyone. Let me just bring up a screen just so we can actually chat. Someone just give me a heads up when they can see that. Cool, nice. Look, one of the things I'm not going to do is talk politics. There's no winners in politics. Obviously, we've got to understand it as much as we can, and that's where this term geopolitics comes in. You can't control geopolitics unless you're in it, but you can control your business. So that's on us all as business owners. So as Mark said, a little bit about me at the top, but the last one there is like, I'm just like you guys. I'm just another human trying to fight this fight and trying to play the game. So I'm a dad, I'm a husband, I'm a brother, I'm a son, just like you guys. So we might see this every day and talk to people about problems every day, but we are just like you. We're the same. So what are we going to cover today? Like, we're going to cover cost pressures, obviously, but there are some obvious ones and then there are some hidden ones. So I want to talk about those hidden ones more than the obvious ones. We're not going to spend 20 minutes talking about fuel prices. And then we're going to have some conversation about what to do about it. There might be some pointing at Winnie and Dean there. And then I've got a couple of examples of what good looks like. And that's some real world examples that I've seen people do over the last few weeks. And they're all quite clever, I think. So I picked a couple of clever ones in there. Okay, so it's the cost pressures are like what we're talking about is what's hitting your business right now. It's not. I'm not trying to be hypothetical. I don't want to be hypothetical. I want to talk about what we're seeing right now. And so the first one's the obvious one. Obviously, the conflict is pushing fuel prices up, right? So we're seeing the suppliers now start to filter that down onto customers. They're not waiting anymore. So before it was just like, oh my gosh, fuel prices are going up, but now we're actually seeing those suppliers passing that cost on, and that's largely coming from the supply chain, and then that causes disruption. So the disruption causes longer lead times, and then you have higher costs. And then the thing that I always get worried about is the less certainty on delivery. At the end of the day, we're all trying to sell things or goods or services, and you want to be able to deliver those things, and you want to meet your commitments. And so one of the things you kind of have to do at the moment is just put a little bit of under promise and over deliver, as opposed to over promise and under deliver, just because you're relying on a few other people to get things right, and it can domino effect pretty quickly. So those are the obvious ones. But what can you do about fuel prices? Not a lot. What can you do about the supply chain disruption? You can just be a little bit less committed, I would say, but just give yourself some breathing room there. These are the hidden ones, and these are the ones we're seeing at the moment. And they kind of they just sneak in. When they sneak in and then no one plans for them. So they're really easy to miss and they sound really small. And that's why I've picked on these ones, because the numbers or the percentages that are given to us are quite small, but they cost a lot. So the first one is, like I talked about before, we're all humans and we're just like you. You got to think about your teams, and all your teams have been going through 2 years of cost of living crisis, and they've got their own pressures on their mortgages, and now they've got fuel and daycares and everybody. I don't know about you guys, but I got about 10 emails in April with price increases from all sorts. So your team are going to be looking at the same thing. Now, I just written here job jumpers, but you really need to look after your people, because a hidden cost is recruitment, and recruitment's expensive. It could be anywhere between a couple of grand to $20,000 or $30,000, depending on what line of work you're in. And not a lot of people budget for recruitment costs. So I think that's a hidden one. So I think you're better off to look after your people and spend a bit of money on your people at the moment, and just look after them. This ACC levies one, I haven't had a single client talk to me about it. We have over 1,200 clients at BetterCo. Not a single person has asked me about ACC levies in the last few months. And the earners levy's gone up 8 cents, but that 8 cents is a 4.8% increase in ACC earner levy cost. It's not going to amount to a massive dollar amount, but you got to understand maths. and I think this is why I'm talking about they add up fast, because this is the next one. The motor vehicle levy is going up 7% annually for the next 3 years, and that's already locked in. So you can plan for that sort of stuff. I'm a mathematician. If something doubles by 7% for 10 years, if something grows by 7% over 10 years, it doubles in cost. Okay, so that's what compounding does. If it goes up by 10% every year, it doubles in 7 years. So the mathematics really impacts. And here's the next one. Minimum wage just went up 45 cents. Doesn't sound like a lot, but that's a 1.9% increase in the minimum wage. Just call it 2%, and that's going to flow on to everybody else. So like when I do my calculations for our team and for our clients, we're not putting in 1.9%. We're putting in 2, we're putting in 3, we're putting in 4, putting in 5 high performers, right? So you have to know that minimum wage goes up, everybody else goes up. It's quite simple. They're entitled to it if you think about it. The simple terminology there is wage inflation. KiwiSaver is, again, it's only gone up 0.5%. That 0.5% actually is a 14% increase in your superannuation. You can't change that. So if you spent $10,000 on super last year, it's going to be more like $11,400 this year. For us, that's a much bigger number in super. So some of you will be paying 100 grand in super. That's going to be 111,400 this year. Okay, so it's not going up 0.5%. Your super costs are going up 14%. And then that's going to go up again another 0.5% in 2028, which is another 14%. So you've got to start thinking about that. Mathematics, right? And then Mark quickly talked about leasing. We are seeing the council rates going up, but we're also seeing commercial rents going up again. We've got landlords having to meet those costs, so they're going to keep going up. Inflation, we've talked about inflation for the last 5 years now, I'd say 6 years. The cost of everything personally has gone up, but now we're seeing that right now flowing into businesses. So supplies are moving quickly. But these are the hidden ones, things like fertilizer and plastics, helium and insurance premiums has been an obvious one for a while with flooding and all that sort of stuff. But meat's gone up and going to go up because of diesel. You got helium going up. If you want to get an MRI, there's helium that runs your MRI. So you're going to see some disruption in your medical appointments because the supply chain can't get the stuff to where it needs to go fast enough if we have disruption. So this is my little tidbit time. When we talked about COVID, a lot. And we all got sick of talking about COVID. It's going to be the same. And it is the same now. So do yourself a favor and learn from that. I think time is money, and just do yourself a favor and don't waste those 15 minutes at start of meetings talking about fuel prices and what it's going to do, just go and do something about it before the meeting or after the meeting. Just acknowledge it in a split second maybe, and then just move on. Move on. So just do yourself a favor. All right, here's the practical stuff. So what to do about it? I've put it in big shining lights. Like, you got to put your prices up. Everyone else is doing it, and I'm not saying be an idiot about it, but be sensible. 3% to 5%, it's not going to hurt. It's going to hurt you if you don't put it up. So you've got to pass those costs on, and you've got to do the mathematics to actually work it out. Now, I've got a comment here that says review your pricing tiers, not just your main service or your main goods. You've got to actually go down and think about where is it impacting you the most, and then choose that first, and then go down the chain. Unpopular opinion, don't apologize for the increase. Just be direct, be confident, be upfront, just be transparent. My costs are going up, I have to pass it on. Just don't do a worse job. Then you should apologize, right? So give people reasonable notice. And that's what I mean about be practical, right? If you're going to increase prices, tell them now for the end of the month or next month. Don't say it's happening tomorrow. And always focus on this word value as opposed to the cost. Like I did talk about, we're passing things on, but make sure you reiterate your value. Your value is really important. And your best customers will always understand, and the ones that complain will just go, and maybe they should go. Doesn't matter if you're a retailer or in hospitality or if you're in service delivery. Your worst customers are the ones that take up all your time and make you feel the worst. So maybe they should go. I've got we'll talk about it a bit later, but I've got a client at the moment who's got a temporary price increase. So you don't have to permanently increase your prices, right? You can temporarily put it in just so you don't lose margin. I think that's a good tip. And get paid faster. That's got to happen regardless of any time, right? So we've got a recent survey that got done by Stripe and Xero. 85% of customers want to pay by credit card. 85%. So if you're not giving them options to pay by credit card, you won't get paid faster. So invoice quickly, shorten the terms, say from 30 days to 14 days or 7 days. If you're at 14, go to 7. Right? If you're at 30, go to 14. Do something, and then make it easy for them. Now, chase your overdue accounts. You can't wait. Can't wait here at all, guys. Domino effects happen fast. In 15 years of doing this, I've only had 4 clients go into liquidation, and I've had 3 this year in 15 years, and 1 last year. So none in the first 14, but 3 in the last 6 weeks. And I've got 1 more coming, I think. Have a process around this chasing overdue. It's not a feeling. You can't get emotional about it. And I think just use an expert. Consider using a specialist service and just pass it on to somebody else. I wouldn't be an accountant if I didn't talk about this cash conversion cycle. I've just put it there. I don't want to talk about it because I think it's boring because it's an accounting thing. But basically, the longer it takes, the more it costs you. So you've got 4 stages here. I think you can negotiate, and a little bit goes a long way. So if you pay suppliers a little bit later, if you collect your cash a little bit faster, if you invoice a little bit faster, and if you hold inventory for a little bit less time, all of those things amount to a lot. So if you want to talk about cash conversion cycle, you don't understand it, you can chuck it into ChatGPT or you chuck it into Claude. It gives you a great summary, and ask it to apply it to your business, right? And you'll get a great summary. And I'm just conscious of time. So this is one of those non-financial ones. Everyone will expect the accountant and the bankers in the room to talk money and talk numbers. I often don't. I talk about vision and clarity. If you're stuck about vision and where to go and you don't have the answers, ask your team. Last few years when we've been stuck a little bit, I'll do a half day or a half hour or full hour session with my team, and I'll get them to solve the problem and come up with the solutions together. And I always say, bring me the illegal ones too, because then I know that they're thinking outside the box, and then we'll cut it down. Obviously, we won't pick the illegal ones, but at least it gets you creative. So once you do that, make sure you write down 1-year goals, 3-year goals, talk about vision. Just be honest about where the business is at today with your team, and they can really help pass that through to your customers. At the end of the day, it's reality, and it's about not putting your head in the sand. And as a business owner, you're the leader, so you've got to make the direction clear, even when the stuff around you isn't that clear and changing every day, like Mark said. You know, we've got Donald Trump, we've got some pretty big egos across in geopolitics. We can't control those people and we can't control that environment, but we can control how we act as leaders. These are the 2 biggest ones that I would do straight away. If you haven't done your annual budget yet for the next 12 months, I would make sure you tick that box. That has to happen. Now that annual budget can be quite high level. I would say don't get into the weeds with that. Get really high level on that. But what needs to be detailed is this 90-day rolling cash forecast. And that should be updated weekly. If you update that rolling cash flow weekly, you will be able to solve for the problem. We have a 90-day rolling forecast. We've been doing it for 10 years. Whether it's a good time or a bad time, we're always rolling 90 days. You don't have to if you don't want to do it during good times, but we do because it just puts us into a good pattern. If you find a problem, you get it. I call it your early warning system. And that's when you pick up the phone to someone like Winnie's team and you go, I think I might have a problem. I'm not saying I do. I think I'm going to have a problem in 90 days. What are our options? I think Winnie will talk about that. If you don't know how to do a 90-day rolling for cash forecast, it's as simple as like Excel. You open up you have 90 columns and you start putting it in there, and you can actually get one off the internet, or you just email us and we'll send you one. All right, so I'm not saying you need to talk to me as the accountant, but you definitely need to talk to your accountant about that cash flow forecasting and the annual budgeting. The margin analysis one, people don't do enough. And I think that's where you can say, hey, these are my top 5 products. I'm not sure if I'm making enough money on it. Can you just help me? And that's where you're going to be able to identify if you're leaking money anywhere. And then just have regular check-ins, whether that's with your accountant or someone else like a business coach or a business advisor or the bank. Just make sure it's not your husband, wife, friend. You know, they're going to pat you on the back no matter what's going on. You need to hear the harsh truths. So if you're working with someone for a long time and it's a bit comfy, I would encourage you to work with someone that is going to hit you between the eyes. How are we going for time here? Mark?
About one minute.
Okay, cool. I will go straight into what good looks like. So this is what you can actually, I'm seeing some examples here at the moment. Now's not the time to like stick your head in the sand. It's like the time to hustle. If you ask most people around Newmarket, they are hustlers. They're all hustlers. I've been in Newmarket 12 years. I've no interest in going anywhere, whether it's tough, hard, good, bad. Like you walk down the street, everyone's hustling. AI is here. Okay, use it. Please use it. It's not coming, it's here. So if you're looking for ways to win, use AI to not just cut costs, but improve your service. We're not trying to cut people, but if you can reduce time spent, you can get more old school and get more relationship focused. Whether you're a retailer in hospitality or whatever, find a way to get more connected to your people, your customers. That would be awesome. Winnie's going to talk more about the having a backstop and temporary ODs and that sort of thing, and Dean might talk about foreign exchange contracts and trade products that the bank uses. This smart pricing one here, just a good example. I have a client who got an invoice from a tradie, and on it had a $50 travel charge. He goes, that's a cool idea. I'm going to use that for my business, even though I'm not a tradie. And they've whacked on a $50 travel charge right now because it's costing them at least $40 to get to a spot. So they've just put that in, and the comms have gone out to their clients to say that it's temporary. So it's not there forever. Quick mindset. We'll send these out later, but uncertainty is permanent, right? Just, it's going to be uncertain forever, guys. You got to plan. You got to get into it. And if you do plan, you'll win. Planners are winners, in my view. So don't stick your head in the sand. Get clear on where you're going, and just get stuck in. It's hard, so choose your hard. And you should win. But better never stops, right? We're always trying to improve. So if you want to talk through your numbers, we're here, or Mark's there. He'll point you in the right direction of who the best people are. But I'll pass back to Mark.
Awesome. Thanks, Vinay. It's really cool. So that's just Vinay, managing director and owner at BetterCo, who are down the northern end of Broadway by Olympic Park. And now we'll turn to Dean Harris and Winnie Kannangara from BNZ. So Dean is a trade specialist and Winnie, senior partner commercial. Hand over to you, chaps. I'm not sure if you're going to do like a double act or one by one.
We'll do a bit of a double act. We've been doing it for years, doing it for a while. Hey, thank you. I appreciate the time. Probably just before I get stuck into our points on this one, just a quick disclaimer for everyone here. Obviously, look, anything that we're saying here is not financial advice. Please, obviously, consult with your respective advisors to make sure that the solutions and things are right for you. So on with that note, it feels a little bit like Groundhog Day, doesn't it? In terms of this current situation that we're in. I won't belabor the points of everything Vinay's said. But needless to say, I'd probably say, look, I'd wholeheartedly agree with most of it. And Vinay, you took a bunch of my points, mate. I don't think we thought about that when we're talking things, but it's good to see at least that we're aligned. I guess probably just a couple of things before I hand off to Dean. Look, from a sort of macro perspective, from our view, look, obviously. Taking from Mike Jones, who's our chief economist, and if you're ever in the Newmarket area and we're doing an economics presentation, strongly encourage you to come and see it. He's a very good speaker and gives it to you straight between the eyes. But look, in terms of obviously this, it's a game-changing shock, right? And the impacts are going to be felt across the board. Across industry, I don't think anyone's going to be untouched by it. But look, probably a headline perspective for us is, look, the consumer is going to bear most of that burden, right? And we're starting to see that come through. Obviously, higher fuel costs is an immediate one that everyone's feeling, definitely at the Bowser. And, you know, your dollar just doesn't stretch as far as it used to, right? And it does change a little bit in terms of the confidence. But look, that being said, there's a number of things that the bank can do to help and support you with that. So I guess without any further ado, I'll turn over to my esteemed colleague to my left, Mr. Harris.
Good morning.
Through.
Good morning, everyone. So as Winnie mentioned, it's very interesting times at the moment, and I feel like a bit of a doomsdayer in that I thought this year was going to be quite positive, and then middle of March, everything hit the fan, and then all the information that we seem to be getting is quite negative and negative focused. We had consumer confidence improving, dairy payouts were going well, export market was running pretty hot, and it looked like it was going to be good times for the next little while. And then our friends offshore, move forward. And our friends offshore decided to throw some missiles here, there, and everywhere, and we're in the current situation that we are. Now, I guess this slide pack is a generic slide pack that we've put together, and it does cover off fairly broadly what we do. We go through and evaluate a customer situation separately from each other, so we don't have a cookie cutter type process. We ask the questions and dig in, and we go through and try and develop solutions for customers that make their business run in a more profitable way and hopefully point them in the right direction. We are not. We do not charge for our service, apart from the interest that we charge for the products that we have. So we are actually quite a good sounding board. In this particular instance, it's actually quite good.
And I might just jump in real quick. I think probably one thing dovetailing off what Dean said, and definitely in line with what Vinay said, is make sure you're kind of talking to those professionals, right? You'll see, Vinay talked about cash flow cycle. That's the stuff that Dean eats, breathes, sleeps, lives. So make sure that you are getting those people around the table for sure.
Yeah, exactly. And to be honest, I think Vinay pretty much did my job for me today, because he talked through a lot of the things that we were going to cover off. And he did say cash conversion cycle is pretty simple and pretty boring and pretty granular, but that's the things that I get off on at the moment. So I'm quite happy sort of talking through that sort of thing. The bank, we've got a big focus on trade at the moment. The trade business is tracking pretty well. With New Zealand being an import-export type country, we are a key part of the bank's offering. So we are the number one trade bank in the country through the Global Finance Awards that were released recently, and we do tailor solutions for our customers. So I won't get too much into that, but we'll move on to the next little part. So the key financial risks that we're seeing at the moment and that we try and deal with, of course, relate to, we've got currency fluctuations, we've got the payment and performance risk, geopolitical, which is quite relevant, combined with the two top ones, and then the regulatory and compliance environment. There is a lot of information relating to these two at the moment, and they all come through to how we receive our goods and when we receive our goods. So the currency fluctuations at the moment are affecting our clients quite dramatically with margins, especially those that haven't hedged. I did a quick exercise while Vinay was talking, and pricing is a key metric for our customers in terms of the gross margins are getting eaten away by this currency fluctuation that was meant to be leading up to high 60s, but it actually seems to be going to mid 50s rather than anything else and jumping around all over the place. A quick calculation that I did saw a $50,000 US amount. So if you're buying stock for $50,000, currently it would cost you 86,000 Kiwi. If you priced it at 60 cents to your clients, or that's what you'd bargain on through your budgeting, it would have cost you 80. You would have had 83 in there, so instantly you've lost 3K. Sorry, the difference between 83 and 86. And then if it goes down further, then you look at 89. So all of a sudden your margins decrease by 6K. So looking at your costings and your margins now are quite significant, because if you're pricing to your customers at 60, but you're actually buying at 58 or 56, or if the market goes worse, then you're definitely going to be behind the 8 ball from the outset.
And I think on that front as well is for those who are buying domestically, but your upstream suppliers importing directly, that's something to be mindful of, that their costs obviously will have changed, so you're likely to see a knock-on impact. So you see there's a downstream impact to everything.
And off the back of that, you've got, as well as selling the product, you've got to make sure you get the money in from after you've sold it. So as Vinay mentioned, you have to be on top of your debtors. It's a bit like the GFC when people weren't watching their debtor books, and then all of a sudden they realised that they had 30-40% of their debtor book was over sort of 60, 90 days, just because they hadn't been keeping on top of them. And me not paying you is a more convenient way of me not paying the bank. So the bank will charge me if I don't pay them, but if I don't pay you and you don't call me, then that's an easy win. So just keep on top of your debtors. What else have we got? The geopolitical risks and the regulatory environment at the moment. We've got supply chain has been really stretched, and this will lead into probably the next slide, if you can go through to the next one there.
No, I'll go too far.
No, that'll do. They're just in there. So at the moment, with what's going on in the Middle East, and we had a little bit with what was happening with Israel as well, is that we're seeing freight taking a lot longer to get to New Zealand, and the cost of it is going through the roof as well. So bunker fuel, which is the main fuel for freighters, and air freight has been reduced as well. So it's just causing everything to go up. So and there's a question that's come through about stock versus cash, and looking at stock versus cash, you go, okay, cool, I need cash, but I also need stock, because if I don't have the stock, I can't sell it. So if you're going to discount your stock to sell it to get your cash, how quickly can you replace your stock? Because there's no point having a shop or a warehouse that's half empty and you can't sell it, and then potentially you could lose customers. So it's sort of, how do you manage the process of discounting to get sales and cash flow, but also making sure that you keep your price point there and can actually keep those sales maintained.
Definitely not an easy solution.
It's not an easy solution, and that's where talking to your professional advisors, talking to your bank, and having a good plan around, okay, what does my next 90 days worth of cash flow look like? That they are quite key and integral in terms of how we're seeing things. Right, if you go on to the next one, when you're talking to the bank or looking for help, as Vinay mentioned, the key things that you need to have is have a clear business plan and a clear case of what you're looking for. And if you can signal to a bank or anyone that you're requesting for help, whether it's capital or a bank or anything really, is you need to know what you want and you need to know how long you want it for. In terms of having the forecast, that's key. We look at facilities constantly, and we are the thing that we ask for the most is, okay, we need a forecasted balance sheet and profit and loss with a cash flow. And if you,
I might jump in just real quick on that one. That those projections are critical. I think the key thing here is the Etch a Sketch is completely shaken up, right? What were the assumptions that I think we all had leading up to Christmas and just post Christmas, and for the folks that were on top of things and starting their budgeting early, those have all gone out the window, right? So I think that active re-engagement, re-evaluation of your costs, and dovetailing a little bit off what Vinay said as well, is that what does that next 90-day look like for you is absolutely critical. Look, I would say, one of the practical things, if you're coming to the bank, is, again, we do look for those financials, those FY25 accounts, right? That's your March 25 accounts from last year. They should be done. That should just be a given, right? So if you haven't got them done, make sure you get those done now.
Mm-hmm. Yeah. And your management accounts for 2026
as well,
should be there or thereabouts, and then forecasting. So that would be the key things that we'll be looking at. Make sure when you look at a forecast that cash conversion cycle piece is an integral part of that, because if one of the things that we look at, and I see most often in forecasts, is trend analysis being completely different going forward than it is historically. So if your debtor days or your creditor days or your stock days have changed or moved significantly in your forecast, we're going to want to know why and whether that's actually they've actually been thought about and done correctly, and whether it's all integrated through into the P&L and the balance sheet at the same time. So that is something that we will definitely need to look at. And one of the things that we've seen, and I think during COVID times, it was an article in the Herald, and it was quite apt that banks hate surprises. So once again, knowing what you're looking for and being upfront. If you realise your 90-day cash flow forecast that Vinay was talking about, your 90-day cash flow forecast that Vinay was talking about, you're going to have a problem in 60 days, potentially with wages for 5 days or something like that, then talk to your bank early. Don't go to the bank the day before saying, hey, I need an OD to pay wages.
Yeah, absolutely. Do not hide your head in the sand, guys. And I think Vinay sort of made that point as well, right? So hopefully what you're hearing here, and I swear to God, everyone, we have not collaborated on this prior to actually sitting down with all of you. But hopefully we're seeing some consistent themes here. Don't hide your head in the sand. 60 days is actually a lifetime in terms of being able to do something. And look, anecdotally, I'll share this with you. We've had clients who, exactly to Dean's point, have come in and said, hey, we've run out of cash and we need to pay wages overnight. We need some temporary funding, right? That puts everyone's blood pressure on high alert. Mine's already too high as it is, folks. So any assistance you can give me in keeping my blood pressure down is helpful. But get to us early, right? Get to your accountant early and start mapping what that looks like for you, right? And really be robust in that. And I'm going to steal a point from Vinay again here. Is if someone's patting you on the back, really evaluate, are they the person to really challenge you on your business, right? And particularly in this time, you want people who are going to challenge you, right? And it's not about picking holes and saying that people don't trust you. It's actually about finding where that difference maker is for you and really and I apologize for cussing, shit-checking your assumptions here.
And the other thing is, and it's an old adage, is being a business owner is a lonely place. So talk, because you'll end up improving your mental health and probably being a better space and getting a better understanding and realizing you're not alone in this if you're actually talking to your advisors, to your bank, even your family. Don't put your head in the sand, as we've all said. Just get in front of it, front foot it, and we can talk it through. If we go on to the next slide, these are some trade products. I think out of these, probably from an import-export perspective, letters of credit and trade finance loans, yes, okay. Trade credit insurance is something that, as we mentioned before, debtors are your cash flow, they're your lifeblood, because if people don't pay you, you're not getting, you can't run your business, you can't pay your wages, you can't do anything. So trade credit insurance is one of those things where I would say in the current environment would be quite good for you to evaluate if you can. People talk about, you insure your building, you insure your car, you insure your life, but no one insures their cash flow, which trade credit insurance is. So that could be something to talk to. There are limited trade credit providers out there, and it's just a matter of, hey, if you need some names, feel free to reach out, or you can talk to your broker, and they can get you in touch with a specialist broker who deals with trade credit insurance, just even for an evaluation point. If you can't get a limit on someone, there's probably a reason why you can't get a limit on someone. From selling with regard to selling goods too, because maybe they don't have good credit in their first instance as well. So they can be a good signal for you. It does cost, of course, like all insurances, but could be something to look at. If we go on to the next one, this is probably where the things that we're seeing are becoming a little bit more to the fore, and what we get involved in a little bit more now. So I'll run through these relatively quickly. Fuel costs are going through the roof. We're seeing the fuel adjustment factors getting put in place across everybody at the moment. 40% fuel adjustment factor for shipping companies, road transport and courier companies is not unusual. So that's a 40% increase in terms of their fuel costs. So that is starting to bite, and those prices come through to the end buyer as well. Shipping is exactly the same. You've got surcharges for war surcharges and delays and transshipment, which is increasing time for goods to get here and goods to get offshore. Marine insurance is on the rise, and in some parts of the world you can't actually get marine insurance, or you can't get the war clause inserted in marine insurance. Yep, 1 minute to go. Thank you, Winnie, for telling me that. Fertilizer costs are ramping up. Oil-based products are on the rise. Plastics, for example, I've seen the price of plastic resins go up 30% in the market at the moment, so that will be passed on. And I guess the key thing is what will interest rates do, which is probably what everyone's seeing at the moment. The talk is when inflation rises, interest rates go up. However, rising interest rates and restricting liquidity is not going to help when you've got offshore generated issues. So it's going to be a very tricky one for the Reserve Bank to navigate at the moment. And we are seeing working capital discussions, just like what we've talked about, FX risks and hedging, and debt is starting to push out. So trade credit agencies are starting to see an increase in claims. I think that's probably me. Yeah.
Nice one. I guess, guys, if I could probably leave you with a parting thought and statement here, right? Is get to your advisors early, get to your bank early, whether that's us or your current bank. We're always happy to engage with you, right? Definitely don't hide your head in the sand. Because the more that you actually can front foot the issues, the more you've got time to actually find the right answers, right? That's definitely probably the key that I would say here. Yeah. Look, we've got a long history as a bank of supporting businesses through tough times. Very recently, through the COVID-19 period. The BNZ lent 70 cents in every dollar through that period. So look, we're battle tested. We've done this. We've got the right people here to help you with. And look, that's what we're here for. We're literally just down the other end of Broadway, down on the south side there. So please drop in and see us. More than happy to talk. Thanks, Mark.
That's awesome. Thank you, Dean. Thank you, Winnie. There are a couple of questions came through, some of which have been covered off, but just to recap on some of those. From this meeting or from this webinar now, if I was a small business owner, trade's gone a bit soft over the last sort of 4 or 5 weeks, cash flow is starting to dry up. I haven't got my head in the sand. I'm taking a proactive stance. What are the top 3 things I should do this morning? I'll go to you first, Vinay.
The first thing I would do is I would go and ask my team if they are okay, because they will just ask where their pressures are coming from. I'm sick of that. Are you okay? A little bit. So just ask them where their pressures are coming from and how are they feeling. Maybe a better question for April 2026. And then I'll take that information and I would see how that impacts what the plan was for your business over the next 2 quarters. I wouldn't look further than 2 quarters. Otherwise it gets too high level. And then I would focus on those 2 quarters, and the first one being we're already in it. We're kind of working on it. So focus on what are the things I need to do right now, like quick wins. And then what are the things that could happen after that I need to start planning for now and start having discussions, say in like 2 months, 3 months or whatever. Just because it gets all too much if you try to do everything at once. So I'm just saying, go talk to your team because they'll give you a more clear focus of what the problems are, and then focus on those problems that they see, and then focus on what are probably going to be your problems in the next quarter. Cool. That could be financial and non-financial.
And I'll dovetail off the back of that real quick. Look, I think if you're talking, those things are absolutely spot on and need to be done. I think if you're looking at from what are the impacts of those to your cash and your cash flow situation, start mapping that out now, and pick up that discussion early, right? Because it's a lot easier to do if you've got a number of contingency, and time is a contingency, right? If you've got the time to map it out, start working that through, right? really test those assumptions in terms of from a cash. If you're currently getting paid 20th of the following month, really model that out, 10, 20 days extra, right? I'm probably being a little bit hyperbolic, but put some stress tests into that and see what that is, right? If you don't need it, you can always curtail things back, right? It's a lot easier to bring things down than it is to lift things up.
Yeah. And for me, I would look at, as Vinay mentioned, you have to talk to people. Your staff's one of them. Probably your suppliers are the other one. Your creditors, because sometimes they can also be helpful with regards to maybe increasing terms slightly or giving you a bit of a buffer. Setting up a payment plan, which is quite good. And the other bit would just be making sure that you keep on top of your debtors.
And the IRD.
And the IRD, yeah. The IRD is an interesting one just because they can be quite friendly, but when they can also be very ruthless. So if you're gonna pull the tiger's tail, watch out for the teeth. So that's the thing.
That actually was one of the questions, was how friendly is the IRD? But I think to your point, Dean, from my experience, as long as you communicate with them, keep them in the loop, and don't sort of go rogue on them, they often are open to dialogue. But if you commit to a plan and you can't stick to it, get back in touch with them straight away so they know where you're at. And also you alluded to this too, Dean, in your presentation about selling down inventory in a way to get to generate some cash. But your point really being that if you do that, that's all well and good. But if you've got nothing left to sell, it leaves you in a bit of a pickle.
Yeah. So I've got quite a large apparel customer who was saying that at the moment, their customers are wanting, they're not selling anything unless it's like 40% off type scenario, which they are doing to turn it into cash to help the business, but they're very mindful that can create quite significant
spiral.
Yeah, spiral. And therefore, you become a Briscoes where you're on sale every other week. And so if you do sell the stock, can you replace it? And when can you replace it? Sometimes scarcity means the price is higher. So, yeah.
Yeah, cool.
Really look at your value proposition, right?
Yeah.
Like if your product and your service is not a discount proposition, really give it some thought before you do pull that trigger, right?
Yeah. Interestingly, from a retail perspective, we had our March numbers through yesterday for Newmarket and for Auckland, and obviously we were starting to trend slightly back up again, but that's been curtailed. But as a precinct, Newmarket is probably trending slightly better than most of the other central precincts, which is quite an interesting takeaway. And one thing I'd say is that I've noticed that negativity, you've got to look after your mental health for yourself first and foremost as a business owner, and also look after your staff. But you really need to put your own life jacket on first. And I think sometimes, really look at where you're at as a business owner. And one thing I've picked up on a wee bit though is that negativity, it's easy to spiral into a negativity death spiral, and negativity can breed quite quickly. So if you're aware of that, I'd probably nip that in the bud with yourself and work on yourself to overcome some of those things before you go out to the wider team. And the other thing, despite the current market, there are still retailers who are trading well. So for whatever reason, right? So sometimes looking around your neighborhood and see what others are doing can give you some inspiration for other things that you might be able to change up your own game. My takeaways from this, which has been really valuable to the three of you, thank you, Vinay, Winnie, and Dean, it's been very useful. But I think getting some independent advice is a good takeaway. Don't talk to, your partner or someone who's that close to you that they can't really give you the full brutal reality of where things are at. It's good to know your numbers, obviously, and don't pretend it will go away. So don't just ignore it. So get onto it as soon as you can. But guys, thank you so much for your time this morning. It's been really invaluable. And hopefully, you never know, things can turn pretty quickly in the current world we're living in. But there may be a bit of a long sting in the tail for some of the pressures on the fuel pricing. We were just coming out the last bit of the tail of COVID and the economic pressures is. So there's always got to be a tail, right? And a TAIL, not a TALE. So we want a tail to tell. Good one. Anyway, guys, thank you so much for your time this morning. Everybody, enjoy your days, and we'll be in touch soon. Cheers.
Thanks, Mark.
Thank you. Cheers, guys.